my introduction somewhere else and check out my LinkedIn. You didn't really miss anything so far. So I was talking about everybody who's trading is also involved with some kind, or potentially involved with some kind of taxation problems. The tricky part here is that unlike usually where our employer or someone else handles our taxes, for crypto, we are completely reliable ourselves. If you invest into stock, if you do something that provides you with interest, your bank will take care of it, your firm will take care of it. If you get money from your employer, then your employer will withhold taxes immediately. That's super different with crypto, because here we are decentralized. You're completely responsible yourself. As much as you're responsible for your keys, you're also responsible completely by yourself for your taxes, because there is no central unit, central agency that will withhold any kind of capital tax or something else. So the presentation is mostly, or is in English, but I do have the German titles added just for context. I guess most of you will be liable for German taxes. At least that's the background under which the whole presentation is held. So if you're not under German legislation or not based in part of the German tax system, and this could still be an interesting information, but will not give you as much as you could get from a similar presentation from another country. So we'll focus here only on German tax law, and that's also my main area of expertise. In the first section, we will go into the, I would say, classical trading, buying and selling assets. That's something we will look into in depth. And then we will have a section where we cover a variety of topics, but more on a higher level, just to give you a brief overview of what all the other topics are. And then we go into tax filing, tax reporting, tax compliance, this section a little bit. And then we have time for questions. So that will be the overall setup of the presentation. So regarding the income tax, so here we are for trading in the area of privates Veräußerungsgeschäft. So trading, that's just a legal tax name in this area. How do you calculate your gains in the area of trading? So one principle we need to know about is the first in, first out. Very common in crypto, we have multiple buy and multiple sell processes. This whole tax area was created for very small use cases. There wasn't, in the recent year, there was very small use cases where this area of taxes was actually used. It was like you had your stamp collection or your private yacht you sold and so on. So it's different for property again, and it's different for everything that's considered a normal household item. So selling and buying a car, not relevant in this tax area. So it was very narrow where this tax law actually applied. And therefore, it was not really considered that a lot of transactions will happen here. So in a German tax declaration, you have one row for your whole crypto tax trading. And that's like you're supposed to declare every single transaction. So that German state is ready for you making one transaction per year. That's it. So that's usually not how crypto works in the modern world and how we're actually using it. And therefore, we need to use some principle that come from similar but related areas. And first in, first out, for example, is from foreign currencies. We assume that it will work the same because we don't have any other guidance how this is calculated. The problem is you have buy. You buy, let's say you buy one Ethereum, you buy another Ethereum, you buy a third Ethereum, and then you sell one Ethereum. You bought all of the 3 Ethereum for different prices in different times, and now you're selling one. So which one are you selling? They're all on your wallet. They all look the same. They're indistinguishable from each other. Fungible, as you would say. And in tax law, we just assume that the oldest one, so the first one that comes in, is the first one that goes out. So we are allowed to use the value, the bought value that we can subtract from the sold value to calculate the profit from the oldest one. It's also relevant for our holding period. We need to know what assets we have long-term and what assets we have short-term. Everything that's held in German tax law for more than 1 year is completely tax-free. Every profit that's made from assets that were held more than 1 year, we don't have to pay any taxes nor declare any taxes. So that's the usual HODL use case. You buy your assets, you accumulate, you do dollar cost averaging, anything in this area, and then at some point during a bull market, you sell. And for those traders, Germany is actually the perfect country because here you barely never pay any taxes. So another thing we need to know is about account separation. Account separation means that everything that you can distinguish from each other should be distinguished. There is also not a very clear must, but should be distinguished from each other. So the ETH that you hold on your Nuri wallet and the ETH that you hold on your Kraken wallet are obviously very different ones. We can actually really distinguish which one is which, because when we are selling them, we're going either on Nuri or we go on our Kraken account. So here we actually do know which one we are selling, and therefore we need not only calculate all our assets with first in, first out, but separated by different accounts. This is a tool that's very helpful if you say, okay, I want to do short-term trading, I want to do maybe even margin trading, and I want to have my long-term holdings separate. So just use different wallets, different accounts. As long as you're able to distinguish them, which one is which, that's already good enough. So then we need to look into what is actually a taxable event. Do I have no? Taxable event is like what needs to happen, that we need to calculate the holding period and that we need to do this profit and loss calculation. Taxable event is, we already talked about it, selling crypto assets. That's like the main one, the biggest one that we have. Selling against foreign currencies is another one. So you're selling your assets, but not against euro, your main currency, but against another currency is also a taxable event. Crypto against crypto is also a taxable event. So if you're selling your Ethereum against some other coin or token, this is also something that requires you to calculate from the sold asset how much profit you make, and at the same time the value at the time you did this transaction of these assets will be the new purchase price of the next asset. So therefore you need to look at on CoinMarketCap, CoinGecko, some tool like that. What was the euro price at the time this transaction took place in terms of crypto against crypto, and that's then the selling price, and at the same time also the buying price for the new asset, because if you trade crypto against crypto, you don't have a fiat price at this point of time. Not a taxable event is moving money to or from an exchange. That's something a lot of people think, because it feels, oh, I only pay it out to my bank account. It feels like that is something, now I need to think about taxes, but that's already too late and by itself is not a taxable event. What's also not a taxable event is moving assets around, transfer from one wallet to another, stuff like that. So then we do have a lot of special cases. So far, we've only talked about the kind of simple case of trading. You're buying, you're selling. There's a lot of other things. And here we could, like each of those, you could probably make an hour-long presentation. We won't do that today. We are aware it's Friday night. But to just give you a quick summary, what tax areas we are able to touch with crypto overall. So the first one is mining. Mining is mostly considered a business because you're buying your mining hardware. You maybe even look for where can you buy the cheapest electricity, where is the best internet connection. So you're actually acting like a business, like you were looking for making profits here. You do maybe even calculations and stuff. So when crypto got the first traction, I think 2015 or 16, the finance minister of Hamburg decided to publish a letter that says mining is always considered business. It was like half a page or something that really just said, okay, trading is considered that and mining is considered that. And they were only talking about Bitcoin back in this thing, but that was like the first time ever that some official government recognized something around crypto or wrote something. So that was for a very long time the only thing also that we had available, that the finance minister of Hamburg thinks this and that is how we should qualify stuff. And from there on, it got a little bit like everything that was called mining was from tax offices considered a business. But if you know mining a little bit better, then you know, okay, there is not only mining, there is like pool mining and virtual mining and cloud mining, and all these other things are not really acting like a business. So you don't really need to, like for cloud mining, you just pay your fee and whatever, and then they do their stuff. So if you buy something on a cloud mining platform, it will not feel for you like you just opened a business. The problem is if you consider something a business, you do not have the 1-year holding period. You have a lot more tax implications and reportings you need to do. And also it could involve other things. For example, if you say you have only one exchange, then you have your mining and your mining rewards. And then the tax office will say, oh, you need these exchange for your mining income because otherwise you cannot pay it out in fiat. And therefore it's a necessary item for your business, and everything that's happening on this exchange is considered business. So also all your other holdings are infected by your business and absorbed into the business, which is usually quite bad tax-wise, because then, as I said, when your holding period is gone, everything's taxable and so on. So that was like the short rundown about mining. A little bit more modern, staking. Staking is quite complicated for a tax office because they think it's like mining, and therefore they were immediately, oh, it's the same as mining. We also consider it a business. But people who know in this area, what's actually happening is that staking is very different. Therefore, slowly the opinions, also the official opinions, changed that staking is not considered a business, but it has one other big implication that I will go into detail a little bit later. There is a small thing that's called extending the holding period. So everything that was used for staking might potentially be under a 10-year holding period and not a 1-year holding period. Also, what are the staking earns, the staking revenue you make here? Also very complicated tax-wise question, because not every increase in assets is automatically taxable. That's something we'll need to talk about in the airdrop case a little bit more. But for staking, it's the case you're actually actively doing something. You usually need to really lock up your coins. You need to sign up for something. You need to send them somewhere. So there is some kind of active part involved. And therefore, the staking income is part of the other income category and is taxed with your personal tax rate, same as the trading income as well. Then lending. Lending has the same potential problem with the 10-year holding period, this extending, because also here you're doing something very active. You give your coins away to get some kind of yield. Also, same area with lending, I would also pay all kinds of yield farming. And here, same questions. What is the income that's generated? Usually it falls under the area of other income. And also how are the base assets treated? So the assets that were locked or paid in or pooled or whatever you call it. These are often in the 10-year holding period. So that's the important things to know if you're thinking of investing your money into any kind of special DeFi protocol, or if something that gives you interest. So all these protocols have, from a tax advantage, potentially, I'll get into that later, why there is this big question mark, this implication of 10-year holding period, which has a massive tax implication. If not only after 1 year you can sell it completely tax-free, but if you need to wait for 10 years to be able to sell it tax-free. So then there is the airdrop. Airdrop is also a word that's used in many different cases. What exactly it is, there is not a very 100% clear definition of what actually qualifies as an airdrop and what is just called airdrop. Overall, if you have nothing active to do besides the process of getting the reward, like something like a claim that would be accepted, then the airdrop is completely tax-free. Receiving the airdrop is tax-free, and actually selling the coins from your airdrop is also tax-free. But as soon as you had to do more than whatever is just required to receive the token, for example, whatever, during the ICO bubble, there was a lot of things like tweet that, share that, like that, all these kind of things, and then you'll get some kind of, or qualify for this and that airdrop, or you need to do something like on-chain transactions to get this kind of airdrop, and so on. So if, for example, Uniswap made it mandatory to get their airdrop to do this and that, then it would be considered taxable. What Uniswap did is what all their clients, all their customers, whoever used Uniswap before, got at some point that airdrop, and all you had to do is claim it, as far as I know. I'm not even sure if you had to claim it. I think you just received the Uniswap airdrop. So that's then considered tax-free, completely tax-free. With the ENS, the Ethereum namespace airdrop, it was that you had to actually claim it. So here, all you did was really claiming it. There was nothing else you had to do besides being qualified for it. That means also completely tax-free. And then we have the hard fork or general fork, for example, Bitcoin, Bitcoin Cash, Ethereum, Ethereum Cash, and so on. So a lot of forks, also not the biggest topic right now, but in the past, forks were a huge thing and are also very much discussed on how to tax these. General opinion these days is that it's basically something you got for, it's like finding a wallet on the street. There is nothing really that's taxable. You hadn't have to do anything. It was nothing active that you had to do, and therefore it's not considered sonstige Einkünfte, other income in Germany, and completely tax-free. So I already mentioned it, the 10-year holding period. That's the real big thing in the current discussion about crypto taxes. If you read any blog article about taxation of crypto in Germany, this was probably mentioned, because it's like this, the biggest topic we're discussing right now. So the German tax law usually says holding period 1 year, and then it's completely tax-free. And a couple or 20 years ago or something like that, there was a case that people used that for, it was not completely tax fraud, but tax avoidance. It was called the container leasing model. So they did something where you had a leasing contract for a shipping container. You never saw that shipping container. It was all just paperwork. And through the depreciation of the container and the leasing money, you had like a tax loss that was then tax-free because it was held for more than 1 year, but overall you had a profit. And so it was used a lot to reduce taxes, and the German state didn't like that. So they added like a little half sentence at the end of that paragraph. And that sentence only says, if the asset was used to generate other income, the holding period extends to 10 years. This was meant to make this tax saving scheme impossible, because with the depreciation and like how this whole model is set up, the 10 years, it couldn't work out anymore. So that was the reasoning behind that. But that was not really integrated in the whole tax law. So the tax law is like very it's really just a couple of words that were added and very simple, no exemptions at all. Over the time, a lot of court rulings came up here, and they made it very soft when this 10-year period is actually supposed to be relevant. And so, for example, one says that foreign currencies that generate interest, like usually you have, so in this case, it was some German millionaire who wanted to invest in a US company. He transferred the 10 million euro or something to a US bank account. And then the deal, for some reason, was canceled. He transferred it back after 1.5 years. He generated interest, and the dollar-euro currency course fluctuated. So he made a profit overall, but he could not have known that, and the tax office was like, okay, now you have to tax it, even though it was more than 1 year, but you got interest on your US dollars that you had during that time, so it's 10 years. German court ruling said, no, that's not what this law is meant for and made for, and therefore it stays for 1 year. So this court ruling was used the last couple of years to always argue that it will be the same with lending, because lending is very similar to actually generating interest. It's just a DeFi version of interest, more or less. And based on that, also for staking, because in staking and it's more or less the same. Also the version of what is additional income that you generated, what falls under this income category, was never really defined. So it was very, that most people just thought that it will stay with the 1 year holding period, and that at some point we get some clearer regulations about that, but more or less it will stay. And last year in August, the German Ministry of Finance issued a draft for a paper that should clarify lots of these edge cases that we just discussed. Like, what is a fork? What's an airdrop? Holding period? What is a cryptocurrency overall? All these things. And within this paper, they also wrote that the 10-year holding period applies. And then they have a very weird example of some private lending, which is not really relevant for the praxis. So they said person A borrows his assets to person B and gets this amount of interest for it. So private lending seems to fall under this 10-year period. And also very explicitly, they talk about staking, which falls under the 10-year period. So if we extend what this draft of this paper says already, we need to assume that everything that's generating any kind of additional income will therefore lead to the 10-year holding period. Now it happened that this paper was just never published. It's still in this draft state. And now instead of like clarification, we have even more open questions, because now we don't know, is it applicable? Is it not? When is it starting to be applicable? Will it be changed? We had elections in between. We have a new government and a new finance minister in between. So there's a lot of open questions around this 1 year or 10-year holding period. And that's also what makes it quite complicated right now to give really good advice what to do in this area, because it's just a really big gray area. One topic I always like to point out is margin trading, or there's very different words for margin trading. They come in the thing of futures, CFD, like everything that's kind of related to something with a leverage. Then you always should think, oh, dangerous, that's margin trading, because margin trading is the only area of crypto where we are actually in the capital income area. So that means we have a fixed tax rate of 25%, not your personal tax rate. This is the only use case, but we have one very big problem in this whole area of margin trading. We have it's called Verlustbeschränkung. So there is a total of losses that are deductible. The thing with margin trading is that you often have high losses and high profits, and overall you hope to have a higher profit. But the problem is that your losses are not deductible. So let's say you have 100,000 profit and 80,000 losses, then you might calculate, okay, profit minus losses makes 20,000 taxable. No, the losses are only deductible till up to 20K. So now you have a profit of 80,000 and you need to pay 25% on 80,000 euro profit that you made, even though your actual profit was only 20,000. So this is not a very well-known fact, especially among younger and newer traders, but everything, in my opinion, like doing margin trading is like the tax version of the tax suicide. It's a suicide version of taxes, doing margin trading. Like the tax risk is so high, it's really not worth doing it with any substantial amount. If you say, okay, you want to try it and learn the mechanics and play around with 100 euro or 1,000 euro, then okay. But everything like really investing or doing anything, there is ways to get around it, not only moving away, but starting a trading business, then you can deduct stuff, but that's now too much detail. And as a private person, not only from the financial risk, also the tax risk is really, really big. So let me check on the time. What did we say? I still have 20 minutes roughly?
Yeah.
Okay. Yeah, that's.
I would say a hard stop, well, 6:30. Because then we're going into evening time.
Okay. Oh, including questions?
Yeah.
Yeah, that's fine.
I mean, if we get the basics down, but yeah, if everyone's happy to have that as well.
So, the difference between tax reporting and tax filing. Tax filing is actually handing in your tax declaration. That's one part. But tax reporting is also like how you calculated these taxes, and that's a big part for crypto. That's not really relevant for a private person in any other area. And here we come to the concept of compliance. And just let me check. Okay. So I raised a lot of questions, a lot of gray areas, a lot of unknowns that even I can't answer at this point, but we have one big thing in the tax law that helps us a lot, and that's the tax filing. Actually doing your taxes and having a tax declaration is the version, the tax office version that nothing can be changed anymore. And for that to be applicable for you, you need to report everything to the tax office. Everything the tax office knows can't be used against you. So you can't say, oh, you traded with crypto, but you think crypto should not be taxed at all, and your 1 million profit that you made in short-term trading should be completely tax-free. Then that's a valid thing to do. They will disagree most likely, but at least you're not in the area of tax fraud. And maybe you're lucky and find someone in the tax office who really has no clue and agrees with you, then good for you. But that's like the most powerful tool we have right now, to just declare as much as possible and everything to the tax office. Everything they know, they can't change later on. When in 2 years, they change their mind completely and say, oh, it's to be taxed like a foreign currency or like a capital income or whatever. It's unlikely from a now perspective, but who knows what happens. The good thing is you can always say, hey, I have my tax assessment. I have a letter from you that states this is the taxes I owe you. And I send you all my documents, all my transactions. I explained everything that happened, and you've known everything. So you could have had a different opinion back when you first made that tax assessment for you. And that's basically where Pekuna comes in. That's exactly what we do to make this reporting as detailed and as understandable for the tax office as possible. So we're really working on getting everything super, super easy explained. So just like the empty text part is already 10 pages where you explain what is crypto, what is Bitcoin, what is trading, what's an exchange, and so on. Like the whole basics. Imagine your grandparents have to read that document and be able to understand it and ask questions. That's like how basic we are going down here. So one big thing is, if you don't feel like reporting your taxes, the big problem is the tax office has very much time. 2011, do you remember what you did in 2011? Because that's what the tax office is still allowed to tax right now. If you're sued for tax fraud, it's not updated, it needs to be 2012. So the last 10 years, the tax office is allowed to go back. And that's the big problem. And we don't know what happens the next 10 years. And we don't know what exchange or whoever leaks data, and think about all the KYC process you've done in the past to all these companies who have a copy of your passport, everybody who has transaction data. We don't know whoever sells your data to the German tax office and so on. So it is quite likely that within the next 10 years, there will be more active investigation also from the side of the tax office to go into tax fraud towards crypto. And in my opinion, it's just not worth it. You have such a good structure, so that symbol is meant to mean tax optimization is a lot better than tax fraud. We have the 1-year holding period. We have the account separation where you can really manage a lot. And therefore you can really get a lot of your taxes tax-free already today. So there is no good reason to be in that area of tax fraud. And yes, here's my contact details. And then quick scroll through the questions.
We go to the, should we allow people like 2 minutes to write questions and then just go to the top?
Let's do a 2-minute
break.
break.
So this is your time to get the questions in. We'll go right to the top. Okay, the one that I have is, do you apply for taxes using service of some consultant or just filling in the normal tax application form?
Either way, like that's the part of filing. That's something, so Pekuna is not tax advisor, so we are not allowed to do your taxes. We are only focusing on the crypto part and only calculating the profits and losses, creating these reports and stuff. So we are not a tax advisor. We usually recommend to work with a tax advisor. Our clients are also the, I would say, the crypto millionaires, to put it very flat. Like usually our clients have a portfolio from more than 1 million. So it really makes sense for them to be super sure to work together with a tax consultant and a tax advisor. If you say, okay, it's just you traded a little bit after listening to my talk, you already know what to do and what to be careful about, you feel comfortable doing it yourself, that's fine as well. So there is no need to have a tax advisor. Finding a specialized tax advisor for crypto is very hard. I'm also training tax advisors. I'm regularly giving these kind of talks to tax advisors as well, because we really need more tax advisors who have at least a basic understanding what's happening in the crypto world right now. And there is very, very few who have a good understanding of that matter. So also the space is moving so fast. And for them, it's really hard to keep up and to understand what's actually going on if they're not really 100% in. There is a handful who are doing an amazing job, but still not a lot. We could have a lot more.
Nice, in demand. So Carola said, I'm interested to see if it's possible to do a separate wallet approach, like have a wallet for holding and a wallet for activities without the currency from the holding wallet that is affected by the change of the hold frist for the activity wallet.
Yeah, I think we answered that already. Yes, that's possible and even recommended to do that, to have separate.
Cool. Okay, and we already discussed the holding period. So applicable taxes on gains for assets held less than 1 year. I think we already went through that. Should we? Okay, so how does it work tax-wise if you're paid in cryptocurrency, so such as USDC?
Yeah. That depends if you're a freelancer or if you're actually employed. Employed in Germany is basically impossible because the German government is protecting the poor employees so hard that you can only be paid in fiat currency and only in euro. There is a couple exemptions where it can be paid in a foreign currency, but everything else is basically impossible. You have better possibilities as a freelancer. Here you just write your invoice and say, instead of payable to that bank account, payable in USDC, for example, to that Ether account. Here still you pay for your freelance income, your normal freelance taxes, same as you would do with your other invoices as well. And then the with stable coins, it's not that big of a problem, but let's say you would also get paid in Ether or in Bitcoin or something, then the change of value between you receive it and you sell it would then be considered under the trading part.
Cool. VV said, what if you get a token package from a crypto startup? So if the token is not on the market yet. There's also, hello?
Yeah, I think you were stuck for a moment, but yeah, I repeat the question: if vested, if employed, or freelance. That's a very complicated question. It sounds a lot easier than it actually is, because the taxation of employee benefits is already super complicated. There's like a whole bunch of different ways how to do that, how to set that up. And you come here up with already a couple different ways how to do it. So if it's locked, if it's not on the market yet, if it's vested, if it's employed, if it's freelance, all these things are different answers. So
that's different.
Therefore, I would like to just skip that question. Really too much for that.
Does the 10-year holding period extend itself if you do actively many things again and again, or is it 10 years regardless what you do?
It's actually one time you do something. So if you use whatever staking for 1 day, then you're in the 10-year holding period in theory. And it also doesn't matter if that 1 day is within the first year or if it's after the first year, then you're in the 10-year holding period.
This is quite an interesting one. Like, do you have to do a tax reporting? So even just buying Bitcoin?
For just buying, no. If you have other income, like for example, through your trading or your staking, whatever, of more than 600 euro, then yes, you're mandatory to do your tax declaration.
Okay. Iggy said, are there any software apps handling calculating crypto taxes in Germany? I know there is such a thing in US.
Yep, there is also a couple of them in Germany. For example, coin tracking is one of them. There is the Austrian company Blockpit who also supports Germany. I think the US Coinly is also supporting Germany. There is a Cointing, which is a Swiss company who has software for Germany. And there is, I thought there was one more. Yeah, but there is like a handful out there who help you with these things.
Cool. Cindy says, are gains less than 600 euros per year still free of taxes?
Yes, that's correct. Trading gains. And for the other income like staking and things, there is another amount that's 125 euro.
So, okay. Are crypto cashbacks taxable?
Actually not at all. So if you use a credit card and get a cashback, that's considered some kind of loyalty program. Same like collecting your bonus miles with Lufthansa or your whatever supermarket bonus card. These are completely tax-free.
Nice. Carilla says Polkadot parachain auction rewards for coins that were given in the crowd loan also taxable 10 years.
I would need to look into the details of these contracts and what was the exact what was exactly happening, but usually if it says loan, very likely. And I've talked a lot about all the question marks surrounding the 10 years. Like a rule of thumb, expect the 10 years to come for everything that's generating any kind of interest. That's what you need to expect right now until we have more clarity. Which is super sad. I know, I hate it myself. Like the whole DeFi sector, basically you can't do anything in DeFi because it will immediately push your assets in the 10-year holding periods.
Iggy says, loss to declare is only when I sell at a loss for fiat, yeah? Yes.
If you do it within the 1-year period or within the 10-year period for the extended time period, then yes. Then you can deduct it, but only in a very small circle. You can either deduct it against other income, you can deduct it against other crypto income in previous or in future years. You cannot deduct it against your salary or something like that, or your freelance income. So you can like use it for previous years or for future years or the current year.
Is it worth packing your income generating assets in a or holding them?
In a holding.
In
that is one idea, but then you're again in the area of business assets, and therefore you don't have a holding period at all. So also that's not really what solves your problem and doesn't make them tax-free.
From your experience, could it still make sense to be active in DeFi staking because of rewards, airdrops, etc.?
That's hard to say. The biggest mistake is to have been part of the, let's say, Ethereum ICO. You bought 1 ETH for €5. You're already holding it for 5 years now. You could sell it completely tax-free and now decide to do staking. Then it makes more sense to first, sorry, my dog's drinking. Timmy. Then it makes sense to first sell the assets, so you at least have the profits that you made already tax-free, and from there on have like a new acquiring cost and then use them for staking. And the question, does it make sense, really depends a lot on what your expectations are. Are you more looking into the profits of the asset itself, if it increases in value, or do you think more that the staking and earning part will be the value generating part of this token? So it depends really from token to token what makes more sense.
Okay, there's quite a few coming in now. I think your dog needs a bit of more attention, so we'll do the last couple before our breakout room. So let's say I receive crypto as a bonus to my salary once a year. Is it taxable?
Yes, and it is part of your salary, so your employer already should withhold the income tax for that part.
Okay, and then the last one is if you work for a startup that gives you a vested token.
Let's skip that. That's the same as above. You already had that.
Then we are almost, and then we're done. I think Lucas had one. If you hold a token of an investment DAO for over a year, for example, from Syndicate.io, the 1 year period doesn't hold either, right? Right?
I'm not familiar with Syndicate.io, but usually like governance token and stuff are not treated any different tax-wise. So maybe Lucas, you need to clarify if you generate any income with that investment. Oh no, I think I get it. Okay, let me quickly Google Syndicate.io. So
on-demand question answering.
If that's what I think it is. Investment clubs. Okay, there is also stuff like you can create token sets. I think it goes in that direction. So where you basically bundle your assets or other people bundle assets together, as long as the token. So if you do everything yourself and you have 100% control over what's happening, then encapsulating your tokens will very likely not block the 10-year period coming into place. If you buy a token that invests itself in other things and that therefore increases in value, and then you sell it after 1 year, this will very likely be considered as an asset that only has a 1 year holding period.
Cool. I think we're going to wrap up now because we only have a few minutes. Thank you so much, Werner. That was really, really insightful. We already had a few comments in the Telegram group saying how fascinating it was, even if it was a Friday night. So yeah, I will stop the recording now.